Ultimate Traders on Reddit, March 3rd, 2024. I just realized I haven't done a video in like 6, 7 months. That's fine. I just did the last video. So this is state of the market. So the state of the market's actually slightly better, but the problem is the stock market has taken off. It's gone on it's on a rocket to the moon. I mean, right now, like I checked yesterday, for the third quarter and the fourth quarter, earnings and sales are finally positive again. The first quarter of 2023, the second of quarter of 2023, we had earnings decline year over year. We had sales near flat, but we had a decline. For the fourth quarter right now, fourth quarter earnings, we have earnings growth of 4% and sales growth of 3.8%. So that's good. The third quarter, we had slightly less than that, I believe. So it's okay. It's okay if you want to give maybe 17 or 18 times earnings. Right now, the way the market's going is trading at 22 to 23 times earnings. I haven't been able to compile complete earnings of the S&P 500 for the full year. But for 2022, it was a record year. We had earnings about $219. On January 1st, 2023, I had an estimate of 208, meaning I saw a decline in earnings of 3 to 4% for the full year. Most analysts had earnings at 235 on January 1st, and I had it at 208. It looks like we haven't compiled it yet, but it looks like we're going to be around the 218, maybe less. But I'm actually closer at 208 than the 235 analysts. On January 1st of 2024, analysts had earnings for this year, 2024, at 246. I have earnings at 235, and even the 235 is a little bit higher than what I think is going to be, but I don't like adjusting because analysts that keep adjusting, that to me is fake. So I actually see earnings somewhere between 230 and 235, but I'll say 235 because at least sales are starting to increase. Sales are increasing, earnings are starting to increase. Rates are probably going to drop 2 to 3 times, but the problem, and the big problem, is S&P 500 is at a record high of near 5,100. So if you take, and the analyst consensus has dropped. I think it's 243 right now. So you go with their 243. We get 5,100. I'm on the phone using my calculator. We're at 5,100 and 243. We're looking at 21 times earnings. What happens if they do like what I'm saying, 235, 5,100 divided by 235? That's 22 times earnings. I'm saying, that we're way too high even on 235. If we're going to earn 235, and being that we're going to start growing again, growing sales again, and saying that 20 times earnings, we're at 4,800. We're just, perfection is priced in. Even at 4,800, that's like us hitting all the earnings growth. Like earnings 5 to 10%, sales 10 to 20%. Like, to me, you do not give the S&P 500 20 times earnings unless we're going to have at least 5 to 10% earnings and sales growth 10 to 20%. We're not even there yet, and we're giving like 23, 24 times, maybe 25 times earnings. Because you know what? It was 246 January 1st, and now it's 243. Watch it keep going lower. And, that's what it is. So, but right now, at least the market is a little bit better. But unfortunately, as of the numbers right now, I believe the S&P fair value is around 4,200. Before, I had said, if you look way back, I said 3,500. The 3,500 was based on my 208 208 for earnings for 2023, and 17 times earnings. Why did I give 17 times earnings? Because we have a decline in earnings. We had flat to no growth. So if the S&P 500 normally grows sales at 10 to 20%, earnings at 5 to 10%, and normally trades at 17, 18 times, the most I'm going to give it is 17 times. Why would I even give it more than 17 times? Some people are saying you should get 15 times. And right now, post-pandemic, people are willing to pay 20 or 21 times earnings because of some mysterious thing in the stock market. No, I'm here to make money. I've been doing trading for almost 30 years. I'm not going to change the way that I vision companies, the way I invest in real estate just because someone else has come to the game and decide that they're going to trade 21 times earnings, 22 times earnings. Now, if this goes on for a few years, maybe I might, join the party and just overbid on everything. Right now, I'm sitting at like 80, 90% cash. I'm just buying real estate. Doing my renovations, I'm buying real estate because the stock market is just too high. Majority of stocks are too high. So video 3, I'm going to go over some of the stuff that I'm trading because I am making a little bit more trades. I'm just not making a lot of trades. So video 2, say the market is getting a little bit better. We're getting an increase in sales, increase in earnings. Rates are going to finally come down, but the problem is the stock market is already at record highs at 5,100. So what is the upside from here? That's the big problem. My plan was, as the market was worth 3,500. As we started to grow sales and earnings, I had hoped to join the market. And while it rallies, go to like 42, 4,300, because that's fair value right now. I was going to keep trading on the way up. But we were like 9 months early for data, and the data was bad. Now the data is a little bit better, but the market already jumped the gun already. So be careful out there. The data is a little bit better, but does not justify 5,100.